Good evening, everybody. Don't have a real enthusiastic session tonight because we're in that indecision mode. As you can see, today's positive trading was not quite in the oversold area, and it was near the bottom of the trend, so it wouldn't be unusual to see a day, maybe two, where the markets pop up a little bit. So I don't think we're going to see anything real decisive until the Fed meeting, of course. And so same scenario over here on the NASDAQ. We're below the T-line. We had a bullish engulfing signal, but we're not in the oversold area. That just tells me we're probably going to be flopping around here a little bit. And the transportation index popped up. So this is really a nondescript chart. See, tomorrow the T-line will be down here, so maybe they'll pop it up. Kathy, that's pretty much the case. As we saw the last time, they were taking it up and dropped it like a rock. And let's see, the S&P 500 also started out lower today and immediately started moving right back up. Yep, so that's the prognosis, is the T-line's coming down, you're in a downtrend, but it's not apparently going to be a straight downtrend. Let me see what they're doing here after hours. Yep, so there's your the futures. They're up 118 points on the YMs. Okay, so there hasn't been anything too much to write home about other than the lithium battery or the lithium mining companies seem to have kind of a steady move in this market. And so this is why I always mention you don't need to have a relative strength index, because you can pretty much see what the relative strength is on specific sectors. I haven't looked at the other ones. Up, PLL came back up nicely. This one seems to have trouble. Whoops. What was the other one? LB. Yep. So that's still in an uptrend. So there's always going to be at least one sector that is showing strength. It looked like the oils also started coming back up today. We can see that here in the in Apache, where all of these opened lower but came right up. ExxonMobil, EOG. So the idea, EOG is such a pill. Yeah, just non-directional. So you can see it's sideways. Let's see, crude oil. Yeah, sideways. Trading at 46 or $86 a barrel. All right, so here's the example of why you want to use your rare process. Now this company, ALLK, apparently did a new offering today of 20, almost 30 million shares. All right, thank you, Kathy. So this is that kicker signal. So there is an illustration that even though they put out 29 million new shares, more than likely, when they put out a new offering and it's touted that everybody didn't get the stock they wanted. So if there's 29 million shares and you had put in a request for 500,000 shares, you only got 350,000, well, that means you go to the market afterwards. So that is now one because of the kicker signal and the fry pan bottom setup. Well. And you're just about to the breakout level. This is one to keep an eye on. Why? Because where does the fry pan bottom usually break out? Right as it gets to where it started. And if it does break out, what's it telling us? There's probably going to be a lot more upside. The shipping stocks also started coming back with J-hook patterns. Here's Nordic. Here's Tank. Forget what Sting did. Not as vibrant, but coming back up toward the T-line area. So I didn't find a whole heck of a lot today. So, I mean, everything looks kind of like this. Pretty junky. However, this is Fling that was acting well until in here. Now you've got a big bullish engulfing left-right combo belt hold type signal. Get ready to buy this, especially if they break through a level that you can see that is an obvious resistance level. So that would pretty much tell you wave 1 for the J-hook, or wave 1, wave 2, wave 3 in progress. And I remember Starbulk wasn't as resilient as the rest of them. Yeah, that's still heading in the wrong direction. Now, that is a good bearish J-hook pattern. However, this is where, again, we're going to be going through the different elements this weekend of which ones would you be buying, which ones would you be selling, and what are some of the elements that make that decision for you. Well, I might not be shorting this one if I can find that the rest of that sector is being bought pretty strong. So I want to keep all my probabilities in my favor. I want to find charts where the whole sector seems to be moving in the same direction, and then find the strongest stocks in that sector. Oh, Pashal. I had one that was an inverted hammer. So here's a J-hook type setup on PL, Planet Labs. Yeah, Zim is one of the, Zim was actually a short. So is that actually a shipping company or a shipping service of some sort? But you can see the bearish J-hook pattern in this one. Now, we had a few that were acting very well on the bullish side. There was our kind of our fry pan bottom series of dojis best friend breakout until right in this area. Now it becomes more of a short is you got kind of this, got a trend trajectory. So where would the next likely target be? Maybe down in this area. So this is adding up everything that we know about what's happening on a stock chart. The signal, the pattern, and what is the overall sentiment on this chart? Which direction is it going? So we've had some good shorts. Why is this chart always going back? There's kind of your bearish flutter kicker signal. After a kicker signal, another bearish flutter kicker signal. And look how easy this was for deciding what to do today. That if it opened lower, first of all, look at the pressure or the direction this one's moving. Down. Then you have a bearish kicker signal, then a bearish flutter or a bearish doji sandwich, then a doji. That told us if this opened lower, you could start shorting because you're already getting a force to the downside. Upstart, well, for crying out loud. Same scenario. You're in a downtrend. They failed right at the 50 with a bearish best friend. And now they're taking it down. So what would be the trading strategy on this one? Stochastic's heading down. You can see you're in a downtrend. You can see you had a bearish best friend pushing it this way. Obviously, if this opens lower, you can be shorting this one immediately because what's it telling you? You're probably having a bearish doji sandwich. And where is it occurring? Right here, which tells us if this candle and this candle are the same, they're not holding this level. Just adding up all the probabilities that you're going to be in the right place at the right time. Now, a lot of people ask, would you use Western, indicators? Well, you can see this looks like a head and shoulders. In Japanese price trading, this is known as three mountains. And look how whether you want to call this a head and shoulders or three mountains, it doesn't matter. It's something that's identified as being a reversal. And look how the reversal started. There's a little shooting star, gap down. Now, here's another. I guess that's not really relevant. But let's say you did. And again, this is something that we're going to be going through this weekend. That if you decided to buy this and it was trading up like this, what are we imagining as far as a signal or a pattern? Got a J-hook pattern setting up. But when does that bullish prospect disappear? When they come back down through, let's say, the T-line, and even more so if they come back down through the open, because when they opened and started trading positive, what is the simple rationale of what was happening? The bulls were in control. As soon as it came back down through the level that they opened, the bears were in control. So this is one of those where I'm thinking, I found a real good one. It's going to come up here, good quick trade. When they come back down here, I've got to tell myself, this did not work. Close it out and get ready to move on to something else. And Daku, same scenario. Which direction is this moving right now? Pretty much in a downward direction. Failed at the 200. Did a kicker type signal. Did that shooting star type signal and a gap down. If they open this lower tomorrow, where do you think your first likely target is going to be? Right about there, because that candle and this candle should be about the same. When it gets here, what do? Wait to see if they're going to trade it back up as a double bottom or go through, giving you a bearish J hook. So some people were asking, what if you see a buy signal that's not at the right place of a your stochastics, or a sell signal that's not at the right place of your stochastic? Well, the next analysis is, where did that occur? Well, there was a morning star signal type setup. It had opened positive, and here's another case where if you had started buying, if you had started buying here, yeah, you're still all right. But what is the one thing that we keep pointing out as far as where does it open the next day? If they open it down below the previous day's open, that's a strong indication that the bulls aren't there anymore. The bears are in control. Now what type of pattern are we looking at? Looking at that bearish J-hook pattern with kind of an evening star failing at the T-line. Where's your next likely target if you're looking at this chart? Pretty much, oops, around down there, the bottom of that channel. And why is the entry strategy very important? Because here was a perfect setup for a bearish doji sandwich. That if it opened lower today and traded lower, what was it telling us? That this downtrend was not supporting at this level. What is that level? I don't know what that is. I should know what that is. Let's check over here. Oh, that's the 50. And what is that? I don't know what that is. Hope I didn't get rid of something important. But this is pretty much observe the obvious. They do a doji right on a moving average. The stochastics close to the low end of the range, and the market looks like it's, what did the market do today? Well, the market started out a little bit positive today, and they opened this positive. What's your trading strategy at that point? Well, obviously, if you were getting ready to short this, it's not confirming. Where would this confirm that you could be going short? If they started bringing it back down through that level, that would show that the bears are definitely in control. Whoops, hold on. Got that. So here are the questionable ones. When you see something like this, your stochastic's not in the oversold area. You're below the T-line, but you see some buying. So now what's your evaluation? Well, they might be bouncing it back up. Same thing with Apple. Except Apple made it fairly easy today with the coming right up to the T-line. Now it makes it pretty simple. If it opens lower and starts trading lower, obviously the T-line's still acting as a resistance level. If they open it higher, if you're short, you definitely close out the short positions at that point. Wouldn't necessarily be a buyer, but wouldn't want to be short in that or those conditions. Same thing with NVIDIA. We actually closed out our put spread for a small loss today because of the left-right combo yesterday, bullish trading today. Now what's the trading strategy? It's very simple. What's it going to do here at the T-line? Now, if it hits the T-line and starts selling off again, giving us pretty good evidence that the T-line's still acting as a resistance level, we could always re-establish that that spread again. But one thing I should always point out, that if you closed out this trade, let's say it was a bearish put spread, you close it out, now your analysis is, what is it doing here? And this becomes a completely different trade. You need to see which spreads work the best, how far out, that sort of thing. You don't necessarily want to go back into the same spread you were just in. Let's take a look real quick at gold. Gold's just kind of drifting lower. Silver was actually a little bit more resilient. That's giving you that J-hook type pattern with it supporting off the T-line and coming up through here. Silver is acting a lot better than gold, obviously. And crude oil is just kind of flat. So what's that pretty much indicating? You're probably trading in this range right now, anywhere from 85 a barrel to 95 a barrel. So what's that tell you about that sector? It's probably not going to be real resilient. And natural gas also is pulling back pretty hard. Somebody is calling this a railroad track. You go up big, come right back down big. That's usually a sell signal, but that's more indicative of a either bearish Harami or bearish engulfing signal. WB, we don't know. We don't need to know the answer to that question because we don't know what all the market dynamics are doing, because that's not going to be a surprise to anybody. So if it's not a surprise to anybody, people are already making their decisions of what they think is happening. So it's already built into the price. So it's not like if all of a sudden things get bad in Europe, everybody's going to say, oh, I didn't know that. So it's already built in. Guy Cohen uses the railroad tracks. I had a good long conversation with Guy. He's got a software or a charting program that we might be implementing or advocating here fairly soon, where we can just build all the formulas right into it and not have to keep showing everybody what the formulas are. Just have them there. Okay. What else? Oh, the dollar. Oh, EXA September. Oil for crying out loud. EX. EX. Okay, DXAZ E2. So the dollar is starting to roll over a little bit. So again, here's that illustration that if you're in an uptrend and it pulls back and then they start back up, if it fails to get to a new high, the investor sentiment says it's not going to a new high and everybody starts bailing out. So that's another sign that there's a change of investor sentiment. And I can't think of any of the others right now. What's silver, gold, dollar, grains. Soybeans. So does this look real enthusiastic? Not really. But it looks like it's possibly doing a J-hook pattern. So when we look at this chart, and it's possibly doing a J-hook pattern, what can we assume about the trend? It was up, down to the bottom, up, down to the bottom, up, down to the bottom, up. Whoops, now it didn't get down to the bottom. What's that kind of tell us? That the selling pressure isn't quite as good. That if you start buying this one, you've got a much better prospect now of seeing it break out through that upper level of that trend. Wheat, that's kind of a dismal chart right now. Wouldn't be trading that. The reason I say that is, if I look at a chart, I want to be able to identify which direction the price is moving. Well, this one's, the corn has a little bit more activity as far as showing that it might be doing a J-hook pattern going back to the top of the trend channel. Okay, Carvana. Okay, yes, that was, I should have used that as an illustration. What did we want to see on Carvana today? Wanted to see it open and trade lower. Well, it just kind of hovered in here and didn't really do anything. And started trading positive. So what was that telling us about the selling force here? Wasn't all that strong. Now, would I short Carvana? I would if it comes back down through today's open and tomorrow's trading. Stochastic's rolling over. They gapped it down. A bearish, that's a bearish kicker signal. So, and again, the stochastic's heading down. It's going to do one of two things. If it trades positive, you can see there's kind of a trend channel. If it trades lower, back below this level, let's make this bigger yet. That means the bears are still in control. Now you can see what type of pattern, bearish J-hook pattern. What was the last ticker for soybeans? Oh, on here, it was actually the actual trade of soybeans. I just did this. How come I can't? Well, for crying out loud. I don't know what I'm doing here. ZSEX. All right, there's soybeans. Thank you. Wait a minute. Okay. So right now, there's not any great direction to this market. You've got, whoops, I'll say, you didn't have very good direction, but there's your Netflix doing an obvious fry pan bottom. There's Amazon that looks like it might still be in this trend. Apple, don't know which way it's going to go. So we pretty much have to step away from some of the charts that looked like they had good potential, but now have kind of disappeared. That means we go back to the ones where we have a high probability of identifying what the trend will do based upon what we know is going on in the chart. So, for example, if I closed out Apple today, I might be looking at Daku, that if it opened lower, got a gap down, heading for this direction, number one, and then possibly a bearish J-hook pattern. So here's why you want to use the charts to tell you what you think could be going on. So an example of this would be if you really thought the markets were going up because of some reason, and you see this type of movement or this type of movement, you've got to, you use it to immediately assess whether your evaluation is correct or not. And I say you, each one of us. So right now the assumption would be you've got inflation. They're still spending money. What are the other things? Can you remember? Well, let's say everything you can think of is bearish. What do you think everybody else is thinking? That it's bearish. So that's pretty much confirming your logic. Now, if you thought everything was bearish, and then all of a sudden they're doing this, you'll say, well, wait a minute, what's happening? There's something out there that I didn't assess correctly. I thought everything should be heading in this direction, but it's doing this. There's influences in that price trend that I didn't analyze correctly. So what it helps you do is when you think something should be moving in a direction, I mean, we're all going to think that. But the chart actually tells you what they're doing and whether your assessment is correct or not. So we want to find things where we know something new has happened in the trend. You can see how this resistance level was broken out on Friday. So we can see that there was kind of bullish signals bouncing off the 50. What's this kind of implying? There's a brand new investor sentiment after consolidating for 2 months. You got a wave 1, wave 2, going into wave 3. So the visual extraction, I guess is the right word, of a signal bouncing off a level that everybody else is watching, breaking out through a level everybody else is watching, allows us to move a lot faster getting into these positions, or also being alerted to the fact that there's a major change of investor sentiment. Oh boy. I can't remember which one it was. Somebody was asking about a chart today, and they said, could it be setting up? There wasn't anything showing that it was setting up. And like anything else, yes, everything could be setting up. We're not looking for the ones that could be setting up. We're looking for the ones that are actually telling us there's a change of investor sentiment. All right, I had a couple other things that I was going to point out. I can't. Oh, Tesla. Whoops. So you can see that there's a consistency here, which means they aren't hesitating to, not hesitating, they aren't, I mean, it's pretty obvious that the T-line's acting as a support level. So if you're long, what would you be watching at this point? Whoops. You'd be watching to see what happens at this level. Because if it breaks through this level, why is that important? Because everybody is watching to see what it's doing at this level. Now, here's another little observation. If tomorrow they gap this up right around this resistance level and start trading positive, you want to be buying immediately. I know the question is, well, do you want to be buying something that is in a overbought condition? The answer is, if they're gapping up, knowing that this is a resistance level, then they probably have very little regard for that resistance level. They're expecting it to go much higher. Let's see, we did Nvax, Rivian, Zim. Light was still working well today on the short side. Wave 1, wave 2, little island reversal, best friend gap down, wave 3. And what was a strong indication for this one? The fact that when they came down through this level was a pretty good indication that wave 3 was now in progress. Oh, coherent. So here's another one that is getting set up. Oh, what happened here? What happened here? Oh, C-O-H-R. Well, for crying out loud. Did I do something? Not coming up. All right. Rum was a new offering, an IPO, and I have done something wrong here. Maybe I need to do S.RUM. No. Well, we could do a couple here. Let's go back to coherent. So you can see what this is setting up for. So this is kind of very simple observation that if they trade this lower tomorrow, come on, God, through this level, what's that pretty much tell us? Wave 3 is starting. So there's the doji rule. I'll get rid of that. There's the doji rule. Makes it very simple. If they open this lower and start trading lower, they're breaking this level. The doji rule says we're trading lower. There's your high probability of wave 3. And Oh, rum. And so that pretty much looks like they must have, was that a new offering also? That was probably oversubscribed. Add GTE. Okay, hold on for the individual ones. Well. This is what we're looking at. And it might be back in a range. So it probably wouldn't be a chart that I'd be paying attention to because there's nothing to it right now. Oh, let's get off of this chart. Okay. All right, so the reason this is kind of quick tonight is this doesn't tell us anything today. This tells us we're probably going to go against the trend, and we have to see if it's going to bounce up or come back up and test the T line. So we really don't know what's happening. And football. Well, I thought rum, was it a SPAC today? How come it was trading prior to this? Oh, Monday Night Football. I'm afraid that if the Steelers aren't playing, I don't have any interest. In the way the Steelers are playing, I don't have any interest at all anyways. Okay, so the assessment right now is any shorts that you have, you don't want to see very compelling buying, or you have the other alternative of closing out your short positions and then waiting to see whether they can get up through this level. Now, the reason you want to wait to see, or if something's going against you, we don't know what the reaction will be based upon the Fed announcements on Wednesday. I mean, they could announce something and the markets come way back down here. So that's going to be why you kind of want to wait and see what the reaction is to that announcement. Jay, what's that one? Suze, yes, if he traded, I just remember in years past where when there was websites set up that when Kramer did something, they did the opposite. Well, also, wasn't it DWAC? DWAC's not getting a very good response. I guess thought somebody said they weren't able to pay their bills right now. All right, so in a brief description, somebody was asking earlier before we came on, what is the definition of an ultimate candlestick training? And it's taking everything that we can assess and say which direction is the market going. If we think the market is heading down, which are your strongest sell signals, or which is your highest probability sell signals, meaning a bearish flutter kicker signal, a bearish doji sandwich, a bearish best friend. Anything that we can see has a stronger sell signal to it in a market that is heading down. We want to put that all into that chart. And then the next analysis, when you look at a chart and you're getting ready to do something. So let's say this was a stock and you're thinking, all right, I'm going to buy this on positive trading tomorrow. Well, when you look at this chart, you should already have in your mind what it should do. It should open positive. Where should it go? I'm going to watch the first target of the T line. And where should it not trade after trading up? Shouldn't trade back below the halfway point of this candle. Now, what that does is there's a number of people out there that can't pull the trigger. What if it opens positive and starts trading off? And that shouldn't be a question. That should be already an analysis that if it opens positive and starts trading off, you should already know what to do with that trade. You close it out. Today is called as SARC. Similar concepts of short. Oh, is that what it is? Okay. So that is a short innovation daily. Okay. There you go, Jay. Jack, hold on. I'll do it right now. But hold on to your individual ones until I tell him to do the double line. All right, so it got through the breakout area with a gap up. Right now, all you can do is this is the bear fund for China. So just stay long on this one. Okay. Iffy market, which means when you see there's an iffy situation, Tim, what I just told Jack, hold on to your individual ones until I tell Jim to do the double line. So you want to know which way a trend is going. Right now there's a little bit of doubt. So would I be adding any short positions tomorrow? Probably not until I see what happens up here. Would I be adding any long positions? Probably not. Not until we see what happens up here. So there are a couple sectors, as illustrated, that are trading strong. The shipping stocks and the lithium mining stocks. I didn't check these. Blink, nothing there. And ChargePoint, nothing there. Once again, if you look at this chart just instantaneously, the fact that they were trading up looked like a good breakout. But the next day when they gapped it down and came back down through the open, close it. This is one of those decisions that it is much better to close out something that you know is now a bearish indication than hanging on to it saying, I hope it's going to turn around, because at this point you don't know whether they're going to bring it all the way back down here. So close it out. It does two things for you. One, it gets you out of a bad trade. And two, it frees up your mental thinking. But if I held on to this one, I'm thinking, oh man, what should I do? I'm paying so much attention to this one, and I'm not thinking about what all the other ones are doing, trying to figure out what to do with this loser. If I had closed it out right there, I have the money, now I can say, don't want to do anything with this yet. Let's see if it does another pattern. Okay, are there any general questions on candlesticks? Apple looked like a good short. Yes. So if it opened here, as soon as it started trading positive, what was it producing? It was producing a bullish or green candle. Where would be the likely place it would show that the bulls are back in control? Right there at the top of that hammer type signal. And at the same time, with that being the logical stop, you can see what was happening here on the 10-minute chart. They were coming back up. And then when they went through, what's this chart telling me as far as a 10-minute chart? Right pan bottom, J-hook pattern. And for the rest of the day, they really couldn't close back below the 10-minute T-line. Is there an easy way to determine a trend is up or down? Yes, a very easy way. That T-line. There's a very simple statistic that if you see a candlestick sell signal and a close below the T-line, you can stay short until you see a candlestick buy signal and a close back up above the T-line. Then they gapped it back down. The assumption is you're in a downtrend until you see a buy signal and a close above the T-line. If you see a candlestick buy signal and a close above the T-line, you can stay long no matter how many sell signals you might see until you see a sell signal and a close back below the T-line. If you don't walk away from any of these trainings with just one indicator that confirms which way prices are moving, it's the T-line. And how long of a period? That's the T-line will tell you that. Some of them will be months. Some of them will be 3 days. So just put down on your little sticky on your computer that if you see a buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close below the T-line. Your downtrend stays in progress until you see a candlestick buy signal and a close back up above the T-line. That keeps you from getting whipsawed in and out. That final T-line rule. Okay. Whoops, this was supposed to be quick, and I'm already at an hour. I guess, Jim, go ahead and do the double line. And in 3.6 seconds, do the next double line. DHI, kind of a Morningstar signal gap up. You still need to break this level. You can buy this on positive trading, but definitely watch to see what happens once it gets to the 50. Freeport. That's just a nothing chart. Even though you have a bullish left-right combo, there's just no direction to this. I'd be someplace else. And GLPI, another one that has to fight that downtrend. You do have a bullish signal, a double bottom. If you're buying this one, you're going to watch to see what it does if it gets to the 50, and you don't let it close back below the T-line. AMLX, you're still in a 45 degree. If this one had closed lower today, meaning somewhere down in here, would have closed it out. But the fact that they took it right back up off the T-line gives you a pretty good indication your uptrend remains in progress. AKRO, another one you want to see if it's starting to do a 45 degree. If you're long, or if you're thinking of going long, you can buy on strength, and I wouldn't want to see it close back below this level. That would tell you they're not in that 45 degree to the upside. Same scenario here. All you can do is stay long as it stays up above the T-line. Fossil, you can be buying this one. Bullish engulfing. So now you just watch to see, and this would be one of those where, oh, maybe I can do this, where you put the Fibonacci retracement on here. So you start from right here, go down to right there. So your first level is right here at the 34. Your second level would probably be here at the 50, and third level. So you're 61%. Now, will it get there? Who knows? But you add those onto your chart, and that just gives you a better visual of if some selling starts, where is it, or where are they doing it? ASO, potential of a J-hook pattern. Sava, so you could be buying that one on positive trading. Sava, nothing there. At best, you could probably be ready to go short on this one if it opens lower after failing shooting star, bearish harami. I'd be more apt to go short on this one. Roblex. That one you can go short, especially if it opens lower and starts trading down through this level. There's your bearish harami, bearish confirmation. Good bearish J-hook pattern in progress. Another fry pan bottom breakout. Stay long on this one. Or you could be buying this one on strength. CDE. I'd wait for this to get out through that level so you're out of this trading range. But that's a strong morning star signal. Remember, the bigger the signal, the more compelling there's been a change of investor sentiment. Coin, that's a dismal chart. More apt to be ready to go short on this one with your shooting star, your doji gap down. If this one trades lower, your first target is looking for that this level, and if it breaks this level, then obviously you've got a wave 1, 2, 3. That thinking you're looking for the Qs. Same as the NASDAQ. Wanted to see what it's going to do as far as playing around with the T-line. ELM. There's another one that consolidated, broke through this level. You can be buying this one. Just don't let it close back below the halfway point of that candle, because that would tell you they aren't breaking out. This is the short Qs. So now you got to be careful again. If the markets head up, it's coming back down into this channel area. NPH. Just stay long as it stays above the T-line. Kirkland's, that's dismal. Would not be long or short this one. No direction. Cold. I don't know why this keeps popping back to zeros. Oh, that one had a kicker type signal gap up. if you're long, it has to open positive and trade positive. If it trades lower, you're still stuck sideways. Amazon, that's one of those where if they open it positive, now you have to wait to see what happens up at the T line. Lab D, so there's your doji rule, that if this opens positive tomorrow, your doji sandwich breakout tells you that J-hook pattern is taking you higher, which tells you the Labu is going to be taking you lower. Matador, that's a nothing chart. Maybe I'd be trading something else. There's no direction to it. ASAN started back up today. Kind of a J-hook type pattern. So if you're buying on positive trading tomorrow, use the T-line as your stop. And Posh, just stay long. Probably going to be in a 45 degree after the big breakout move. Myrna. This one, you can see there's no real enthusiasm in it, and it's starting to roll over. I'd be ready to short this one on weakness tomorrow. So I'd short this one on anything below 127. Well, CDE, BHP, and nothing wildly excited on that one. And Rio, nothing exciting on that one either. Just because they've got bullish signals, you want to take a look at what the rest of the chart is doing. And that's telling you there's really no great enthusiasm. Trending. Here is TC2000 code for 34. Okay. All right. Thank you, Terry. Is it too late to short NVAX? Not really. You're just starting your downtrend. So I'd be ready to short it on any weakness, telling you that this level is not holding, that you're now heading into wave 3. Okay, so now we're up 44 points on the Dow. Okay, I'm kind of, well, not kind of guessing. You can pretty much evaluate that there might not be a whole lot of movement for the next couple of days because of the Fed announcement. And the problem with going after something is you don't know what the reaction's going to be. So some people are saying, all right, everybody's saying it's going to be 3/4 of a point. Some people are saying, well, if they do it up a whole point, then that could mean that the Feds think things are worse than what they are, and the market craters. So this all depends on what the investor sentiment is. Remember, if crude oil is going up, sometimes that kills the market. Other times when crude oil is going up, that's telling everybody the economy is picking up, buy the market. So it all depends on what the sentiment is at the time. Okay, I guess with that, we'll see everybody bright and early tomorrow. Wasn't it over 2 points with Paul Volcker? Paul Volcker always liked to surprise people. I can remember, let's see, back in the year 2000, 2001, 1999, every time the Feds came out with lowering or raising interest rates by a quarter of a point, the market would just scream one way or the other. And we were sitting there with our fast trading, just clicking on things, buying, selling. But the volatility in the market, once you saw which way it was going, there were some guys in there that would make 600 trades a day, and they were making $10,000, $20,000 a day. I'm thinking, I'm not doing this right. All right, everybody. We'll see you bright and early tomorrow morning in the chat rooms. We'll see you.